The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello and welcome to the COB. Really good to be here with you. I'm Nadine Blaney.
And I'm Danny Akuye. It looks like we're both green almost today, but we're not green on screen.
No, what happened? We were talking about record heights yet again when we got the session underway today. Of course, a shortened trading week, but just couldn't hold on to the gains. There's the COB Australia Index, so it's already closed down by about 0.2%, and it looks as if, Danny, the S&P ASX 200 will be closing down around that amount as well.
Absolutely. So a little bit of profit taking sneaking in the afternoon session, but let's have a look at our three themes. And there you go, a record retreat. Well, it was month end, quarter end at the back end of last week, so the cynic might say, well, maybe some profit taking was due with that weak lead that we had from Wall Street overnight.
But today we did see strength in the materials space, in the energy space. We saw iron ore climbing back above 100 on the futures market, Dalian iron ore futures, I should say. And we heard from the RBA. We got the minutes through at 11:30 a.m.
Absolutely. And apparently they said no rate hikes.
Yeah.
That wasn't discussed. So we can all hopefully breathe a sigh of relief that we're not going to have another rate hike. But you went to an interesting meeting today, didn't you?
I did. It was
Kent.
Chris Kent, RBA Assistant Governor, talking about the new approach that they're taking when it comes to basically liquidity in the market. It's a new approach that's being adopted by a number of different central banks. It's basically having ample liquidity is what it's called. He said you could also call it fixed price, but ample is the way that they like to describe it. But on the broader macro, refused to be drawn very much. Of course, we were getting the minutes later on. Just said that there's uncertainty is the word that he would use about the outlook, although reiterating, we'll do whatever it takes when, whatever Michelle Bullock's line was, I forget what it is off the top of my head, but just, saying that demand is coming in line more so with supply, but there are still risks around inflation.
Absolutely. And there's also those tax cuts coming through and the budget as well. But let's have a look at some of the sectors of today and see how they performed. So a bit of profit taking here in the healthcare sector, which is interesting because it was also in the US, and Ramsay seems to be under the most pressure there, as well as Austal.
Yeah, ResMed was featured on today's edition of The Call. It was tongue-in-cheek, the resurrection special post-Easter. So a bunch of stocks that have been down and out. Will they continue to be so? REITs coming under a bit of pressure today as well. But it really was, as we mentioned earlier, the miners and the energy space and gold miners as well that did really well today.
So gold hit an intraday high overnight in New York, and obviously we've seen some love here in Australia for our gold miners. A lot of those were running. But I'll tell you what else has been running is Mesoblast. My golly goshkins, that was up another 72% today, and it looks as though investor excitement surrounding its pending US Food and Drug submission continues to build. Mind you, that looks like shorters covering to me.
Yeah, well, I was going to say, it's been a long time in coming if it actually does in fact come through. It's a very volatile stock. Aussie Broadband ending the day higher. So it is going to be slashing its stake in its rival internet provider Superloop. We know about this story. Danny owned 19.9% of Superloop. Superloop went and took a contract with Origin away from it, even though it had made overtures to take over Superloop. So yet another piece of that drama playing out today.
Absolutely. And Austal has rallied just over 9%, confirming it had received a takeover offer from South Korean shipbuilder Hanwha Ocean at $2.80 at 2.8525 per share. However, the company said it was unsure whether the deal would get enough regulatory approvals to proceed. But just another indicator, there's so much M&A activity at the moment, Nadine.
And you did write a great view that's in the COB newsletter. If you don't subscribe, you should. You can find out how easily on our website. And then, Danny, to sound like a broken record, if it does go through, yet another company off the board.
I know, which we don't need. We need those IPOs to start in Australia because at the moment we're losing more companies than we're gaining. Aurora also being sold off after they've wound back their earnings expectations. Interesting to see the bottling in the premium sector, particularly wines, not doing as well, which, anyway.
Yeah, and Paladin Energy, it was the stock of the day. I'd love to segue into our little clip about the stock of the day, but we'll leave that there because sitting beside us, it's a Tuesday. If it's such a clock by it, Martin Crabb is joining us from Shaw and Partners. Martin, nice to see you.
Good to see you too. Nadine.
Any thoughts about anything we just discussed there?
Yeah, it's really interesting that the miners did particularly well today and the defensive stocks did poorly, and sort of the narrative that the economic data is coming in stronger than expected both here and around the world. So the bond market sold off and people are buying cyclical stocks to cover themselves against that, and healthcare and these other names getting belted. So it's a bit odd. Obviously, we're one of the few countries that has a 4-day break. So we're sort of trading a little bit on Friday's noise in the US. The SPY was up 80, but obviously we had the Monday session. We had the big sell-off in iron ore, then the big rally. So it's a little bit all over the place. But, you know, you make the point on M&A. It's like stocks are disappearing pretty quickly at the moment. Virgin UK, you know, AWC, you know, now... It's interesting, a South Korean company buying a company with US military contracts. Yeah. We'll see how that one goes. But like a lot of companies are going, well, our borrowing costs are now known. We can start doing M&A because we know how much it's going to cost to fund it. Whereas a year ago, they had no idea. So I expect to see more of it, I think.
Totally. Yeah, let's look at copper though, because that's what you came along with today. Yeah. What is going on with Dr. Copper?
Dr. Copper, it's in contango, so it means the forward price is above the spot price.
I just still picture people dancing when that word gets thrown out, but there you go.
It's a different sort of tango, right? It's the contango. Yeah, so the forward price is above the spot price, which means that the people are clambering to get hold of copper. It's in such shortage, and the market looks like it's going to be in about 1 million tonne deficit, which is huge. And so it's just, there's a squeeze going on in the copper market, so people are buying those forward. So this is the data back 20 years, and you can see that very, very rarely is there a $100 price gap between the two. So, and that's just the Commodity Research Unit estimate of what the copper market. So you can see there's a 1 million tonne deficit in 25, 26, 27, because whether you think it's EVs or whether you think it's windmills or whatever, everything needs copper, right? So the transition to zero emissions is going to require a lot of copper, and there's not a lot of new supply coming on stream. And it's very difficult for investors to get hold of copper in the Aussie market. Oz Minerals was the go-to, but that got taken out. So you've got Sandfire, and I think Evolution's interesting because it's copper and gold. Gold's the other thing everyone wants at the moment. So Evolution was up almost 6% today. So it's like, you've got Sandfire, and then in the small end, a couple of stocks we look at. One is AIC Mines, A1M is the ticker, and Firefly Metals, FFM is the ticker. So they're two small caps way to play it, but it's very difficult to buy copper exposure without going into the smaller micro cap into the market. So it looks like a really interesting play. Okay,
I've just made a note to call those two companies because, yeah, it's hard to sort of get this exposure in the Aussie market right now. Okay, so that's an interesting one. We keep hearing cocoa is worth more than copper, but we'll leave that one there post-Easter. Uranium, I know you guys at Shaw's held your uranium, what was it, conference last week?
Yeah,
and then today we've got Paladin saying that it is now in production.
Yeah.
So what now?
It's all happening in that space, isn't it? So we've gone from having a massive oversupply and everyone running down stockpiles, and even Cameco is actually short uranium. They've committed more in selling than they do in production. So everyone's now racing to bring material into the market. The spot price has obviously gone berserk, but it does look like, the debate again about if you have nuclear capability, why don't you expand it? It's different for countries like Australia that has nothing. They need to start from scratch. But if you're Germany, Japan, US, China, you've already got the capability. Why wouldn't you roll it out? So I think uranium's caught the market's attention for very valid reasons. Some of these stocks have run pretty hard already, though. I think Paladin's up to almost $1.45. Yeah. It's a pretty big number, but it does look like a space where there is upside momentum to prices and therefore upside momentum to share prices.
That whole electricity generation thematic is really gathering steam. I read over the weekend Microsoft is talking about building a mega data center, $100 billion.
Wow.
The money going into data centers to house Gen I. Yeah. I mean, there's already problems with the grid if you transition to electrify everything, but if you're then overlaying the infrastructure for AI, surely the next piece of the puzzle is how are we going to get enough clean energy?
Yeah, those data centers are massive users of energy, as you said, and the greater the processing power you have, the more energy you need to use. So everyone's saying, oh, let's buy the chips, but what about the energy? Where is that going to come from? Because renewables, are not growing at a pace that's going to keep pace with it. So that's why nuclear, which everyone had written off, 2 decades ago, after Fukushima, everyone had just written uranium off, never going to happen again, and that's why it's coming back in, because it's like it is a good base load source of power if you already have the infrastructure in place for it. So it makes a lot of sense to have some exposure in your portfolio.
Okay, so that's a good chat about materials, lots of ideas in there. We kind of glossed over the fact that we saw US 10-year treasuries rising yet again.
Yeah.
I mean, what's going on here? How significant is it?
Yeah, well, the market's moving almost right away from the Fed cutting rates this year. I think the futures are 59 basis points now of cuts for this year. So we're at 400 and something at one stage, maybe not 400 and something, 150 or 200 points of cuts at one stage. So the market's saying, look, the data that's coming in is resilient at worst and actually improving at best. So the ISM Purchasing Manufacturers Index that came out last night showed a recovery in manufacturing in the US. So bond yields have to sell off. If the Fed's going to keep rates at 5.5% for a year or so, and then gradually reduce them, then 4% is too low for the 10-year, so it needs to kind of move up. So the yield curve's not super inverted; it'll still be inverted. It's not going to go to 5.5, but it has to drift higher. So I think the narrative that makes sense to me is that have some exposure to cyclicals, have some exposure to minerals or mining, and fade some of your more defensive names, which is where all the interest rate sensitivity is. So things like healthcare, real estate, telcos, utilities, they've performed quite well in the falling bond rate environment. In a rising bond rate environment, they might give some of that up.
That's interesting. I'm dying to go to what's happening with the yen and the yuan, but I won't go there because there's a lot happening in that part of the world.
Yeah.
The Mag 7 versus the mediocre 7, really briefly. You're liking the commodity side, but I assume part of our mediocre 7 might be our big minus.
I heard this narrative from a fund manager last week who called it the mundane 7, but I thought the mediocre 7. So if you take the big 4 Aussie banks and the big 3 iron ore miners, they don't look like they're going to grow earnings, much, if at all, over the next several years. And so they're dragging the whole market down. They're on 10 times earnings with no growth or negative growth for the next few years because iron ore's falling and the housing market in Australia is really not going anywhere. So how do the banks grow? The opposite in the US, where you've got the 7 magnificent stocks that are dragging everything higher. So the outlook for the Mag 7, for the mediocre 7 there, as I've called them, is negative earnings growth. In fact, the outlook's been negative earnings growth for years from these companies. So they're just dragging the market down. I just thought it was an interesting parallel. They've got 7 superstar stocks dragging their market higher. Those mediocre 7 make up 40% of the ASX 100,
huge.
Dragging it down. So you kind of need to avoid them in Australia and lean into them overseas.
Boy, I'm starting to feel a little bit depressed about the situation here. But before we do, I mean, you are still finding opportunity. You mentioned copper, but where are you looking to add growth into portfolios?
Yeah, look, there's a few stocks that are in the growth category that have been beaten up. I mean, IDP Education is one that sort of stands out. That's hit another low again today. There's things like Worley Parsons, which again is a good way to play energy transition because they have thousands and thousands of engineers working for them, and no matter what your outlook is for energy investment, it's going to use engineers. So I think there's some interesting stocks, but as by and large, the market looks expensive, right? And you kind of need to dig pretty deep to find things that are interesting. I think outside the commodity space, it gets really stock specific. I mean, Aristocrat's another stock that's been very weak. That's off almost 10% from its highs. And so you've really got to look at things that sort of stand out as saying, why has this stock missed the rally? Is there something idiosyncratic that I'm missing? And sort of pick the eyes out of the market, because at a macro level, it does not look interesting at all.
No, and a lot of stocks have run very hard.
Yeah, absolutely.
Martin, very interesting as always. Thank you so much for joining us on the COB. Okay, now we're going to move to stock of the day.
Well, I think so. Let me forward my... Yeah, there we go. Mark Moreland from Team Invest. You got it, Danny. And Scott Phillips from The Motley Fool gave me their take on Paladin. Let's listen.
This is nothing but good news in today's announcement. Share price is higher. They got to production. So, they're moving along the path they've been setting for themselves. I don't know how you value this thing, quite frankly. So, no, not for me. But if you own it, you probably own it prepared to take that risk or have that speculation. And if you have, then this is a nice, a nice box to check on the way through.
You could invest in this. It's already a $4 billion company, Paladin. So, that's actually going to generate quite a lot of profit to justify that kind of market cap. Now, they may well do it, and I agree with Scott. It's great that they actually have started producing. That's terrific. But there's no way, from a Team Invest point of view, you could put any metrics on that to say it's worth what it's worth or it's not worth what it's worth.
Okay, that was Paladin, but now let's have a look at some of the market leaders in today's trade, and it really is Golden Energy shining brightly today. West African Resources at the top of the leaderboard. Evolution Mining, we were just discussing that and with Martin Crabb to grab some gold as well as some copper exposure. Gold Road, Paladin, stock of the day, we've touched on that, and Newmont finally making a run up almost 5%.
Yeah, and West African Resources also benefiting after it got a mining approval granted as well, although no doubt getting caught up in the momentum in that sector altogether. Checking out the laggards though, we've got Aurora, so we've mentioned that one in relation to just that
earnings downgrade.
Downgrade coming through. We've got Goldman Sachs weighing in on that downgrade as well, just saying that it indicates both Legacy and Saverglass, so that acquisition it did in Europe, are tracking below expectations, but it has a buy rating on the stock. Megaport, Netwealth, Weebit, and Premier also coming under pressure.
Absolutely, and in the smalls, let's check those out. And Farm Aust up almost 18%, and then the likes of Aeris Resources up 11, Bowen Coal also going for a run, up almost 11, and 29 Metals, which was carted out backwards off the back of a cyclone last week. We're seeing that stock recover up almost 11% as well.
So you get the stocks that match your shirt. I'll just take I'll take the negative ones, no problem. Let's see what did lag in this space as well. Ardea Resources, Legacy Iron, or amongst those lagging the broader market in the small to mid cap space. Okay, so what do we have coming up tonight? I've got to admit,
before we get there, I just noticed Burgundy Diamonds, so I thought I'll just mention, because I had this great tweet in terms of over the last 10 years, guess what has outperformed absolutely everything? Rare whiskey, up 280% versus the S&P up 158%. So we had a little bit of an interesting debate with Steve Sosnick and everybody else piping in of who loved whiskies, who was drinking them, and who was investing in them.
Do you drink whiskey?
Not anymore.
No. There's a story behind that. I'll get it. All right, so whiskey up 280%. Noted. Here's what's on tonight. We've got a whole heap of FOMC speakers coming out this week, so we'll be listening for any clues as to rate cuts, timing of rate cuts. The rest of it jolts. The Fed likes this measure. It measures the quit rate. So if you're quitting, then you feel pretty secure that you're going to be getting another job. That's the presumption.
Absolutely. So that'll be really interesting for the bond markets. And then the day ahead tomorrow, down under, the China, I always get it wrong, Caixin services for March, and one company, Ridley Corporation, going ex-dividend. But with so many Fed speakers, Nadine, and the jobs data, I can't help but feel that we might be following US markets again this week.
Yeah, I do think that's the case. We did have the Aussie dollar little change through this Asian session. Of course, we did have the RBA meeting minutes confirming that shift to neutral at the last meeting. The board did not consider raising rates, so that's an interesting one. Just noting a little bit of breaking news coming out of Europe as well. We're on the cusp of their market opening across the board. UBS will be buying back shares to the tune of $2 billion. So that's an interesting development there. Look, it'll be interesting to see what happens on overnight markets when you consider just broader sentiment toward rates, bond yields, and then where we sit fundamentally at some of these index levels.
Absolutely. We've had an amazing performance thus far this year, and markets, sometimes when sentiment changes, they're just looking for an excuse. But hey, we'll probably have to wait and see to what the mighty US bond market does, because at the moment, it is definitely the piper playing the tune.
Now, Our market, what was the final figure for the S&P 500 or 200, I should say?
ASX 200.
What am I talking about?
I've got it currently we're closing up 9 points, just down by just over 0.1% at 7,887.
That's what I have as well. So we'll call it a day. Look, you heard Danny name dropping some of the amazing interviews that she did today. I was Steve Sosnick, whiskey?
No, I know that was on Twitter. We were having a Twitter chat.
Say.
No, I didn't speak to Steve today.
Who else? We spoke with lots of people today.
Yeah, I did. A couple of great small caps, really worth listening to.
Okay, we've got those up online. You can catch up, of course, with everything that we've done throughout the day today. I was only on the call, but it was a good episode of the call. There was a couple double buys in there. We look forward to doing it all again tomorrow.
Have a great evening.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.